Okay, so I'm going to go over a horizontal analysis of income statement and balance sheet. Remember that horizontal means going left to right that you're comparing. So um, a lot of things are done by horizontal analysis, right? So examples in life, like people might say, for example, high school might say, okay, we increased the average ACT scores of our students from 22.9 to 24.1. It means that, we had a 5.2% increase. So that's a favorable trend, right? A difference being an unfavorable trend, if you said a decrease in sales of 2.4% would be an unfavorable trend. So then you calculate what you're going to do about that. It gives managers input. So a comparison of one item on a financial statement with the same item of a previous period is called a horizontal analysis. So what you do is you find the difference, whether it be an increase or in parentheses decrease of the current period, meaning the current year or current fiscal period, to a prior fiscal period. And then that's either an increase, which you won't have parentheses around, or a decrease, meaning you will. Then how you find the percentage is take that increase or decrease and divide it by the prior period to find out what the percentage is. Okay. Um, okay. So let's give it a go here. We're gonna um, make this bigger here. I'll make this bigger. Hopefully that helps on your end. Okay. So first of all, you're going to find the increases or decreases. Okay. So we're going to take the current year minus the prior year. Okay, so from left to right. So 659, 470.53 divided, or minus, sorry, the prior year, which was 642, 189.81, is 17,280.72. Since I have short-term memory. 72. Okay, so that is the increase. This actually is an increasing one. So then to find the percent, we're going to take the amount divided by the prior year. So we're going to take this divided by 642, 189.81, and that gives us 2.7%. If I round that, times by 100 so you can see here. And we're looking at this number. We're going to go out like one decimal. So we're going to go 2.7%. That means that our sales increased 2.7% from the previous year. So you're going to keep doing that with each of the numbers. So you're going to take the current period, or the current year in this case, minus the prior year. Okay, so the current year is larger than the prior year, so it's positive. So we have 19,190.93. Okay, then you're going to take that amount and divide it by the prior year. And then I'm going to times it by 100 so you can see. And so you have 6.4, because that's 5 here. 6.5% is the cost of merchandise sold. So actually their cost of sales, their cost of goods sold went up though, right? That's not a favorable trend, but it's an increase. So then their gross profit year, so looking at their gross profit, you can see that their current year, it went down, even though their sales went up, their cost of merchandise sold also went up more. So they actually are not going to make more money, even though their sales went up. So we're going to take their current year minus the prior year, and you get a negative, right? Which you will. We're going to divide that still, because it went down. We're going to still divide that by the prior year. And we're going to times it by 100. And so it went down 0.6%. We're going to put that in parentheses. We're going to put negative S in this. Well, I didn't put the difference in there. It was a negative. I'm just recalculating. So I'm going to recalculate this difference so I can put that in there and show you what that looks like. So minus 0.21. Notice that it automatically, when I put a minus in there, it puts parentheses. You remember in the accounting world, that's what a negative number shows up, should show up in parentheses. Okay, so you're going to do that for each of these other line items. Again, taking current year minus the prior year to get your difference, and then you're going to divide that by the prior year to get your percent of increase or decrease. Again, this tells you a lot more about a company. Like, rather than saying I made less money, you can really look here and say, well, as a manager, you can say, well, we made less money. We made this amount less in our gross profit, but our sales went up. But that's because our cost of goods sold also went up. It increased 6.5%. Then you can look at, did some of our vendors increase their prices that we bought from, that we purchased merchandise from? Then you can delve more into what's going on with your financial statement. Okay, miscellaneous expense went down. This is a good thing. Decreased. You can look at what decreased there. Your supplies went down. So I'm going to save here, and then we're going to take a look at this here. Okay, so then a comparative balance sheet again is going side by side, and you're going to take the current year minus the prior year to have the amount, and then divide the difference by the prior year to get your percentages. Okay, and I'm going to show you what that looks like in the end here. Okay, so our net income after federal income tax, we went down by 3,803.63, so 3.6% down, which isn't good. Our income from operations was less, went down 4.4%. Our uncollectible accounts expense went up, so you want to look at that. There's more people that didn't pay their debts. In our current situation in our economy, which is, the shutdowns of businesses and all that, I'm sure our uncollectible accounts for many businesses going to go up, and they weren't foreseeing that, right? They didn't have their allowance for uncollectible accounts as much. Salary expense went down, so that's good. The salaries went down. Advertising expense went up. almost 8%, but their sales did go up, but maybe the cost of advertising is not going to benefit enough the sales to, help you out enough. So, your gross profit went down by 0.6%. So really, this gives you more information about a company and make management decisions. Comparative balance sheet, your equity, um, your total stockholders' equity, it went up, 15%. Okay, so it increased. Your liabilities went up a lot, so 35%. So, then you want to look at individually, our payroll taxes went down. You want to look at what's gone up and why it's gone up. So your accounts payable went up, and maybe you're lending a lot more to your accounts payable and they're not paying you back. So you really need to look at your balance sheet. Your current assets went up. Your plan assets went up 56% from the prior year. So this will tell you some information about what's going on from the previous year to the current year. Your inventory went up 6%. Your accounts receivable, the book value of your accounts receivable, which is how much you're really worth, is up 14.5%. So that is the horizontal analysis of an income statement and a balance sheet.